U.S. markets are kicking off a snowy Thursday morning to the downside, even as M&A activity appears to be heating things up. We've got a marriage between the two biggest cable operators to tell you about this morning. Comcast will buy Time Warner Cable in an all-stock deal valued at about $45 billion. Let's take a look now at details of the deal. Time Warner shareholders will get $158.82 in stock for their shares, which is about a $23 per share premium above where Time Warner Cable stock has been trading. In an effort to get the deal through regulators, Comcast says it will sell assets covering about 3 million subscribers, and that will leave the company with about 8 million new customers. Once the transaction closes, Comcast says it will buy back an additional $10 billion worth of stock once the deal closes at the end of 2014. And the weather has canceled today's Fed chair appearance from Janet Yellen on Capitol Hill before the Senate Banking Committee, but our Joe Doe is reporting the testimony will be rescheduled after next week's congressional recess. In the meantime, investors have more economic data to digest. The Commerce Department reports that retail sales fell 0.4% in January, and that was worse than what was expected. Once you strip out auto sales, numbers were flat. On the jobs front, weekly jobless claims climbed by 8,000 to 399,000. Economists had expected claims to fall slightly. And more moves in the executive suite at Penney. The struggling department store chain says Chief Financial Officer Ken Hanna is leaving the company after a little more than 2 years on the job. The company saying Edward Record, who worked at Stage Stores, will replace Hanna on March 24th. And keep an eye on shares of Whole Foods in today's session. The supermarket chain beat quarterly results on the top and bottom line, but lowered its guidance for 2014. Our Jim Cramer saying that the guidance implies the company's growth rate could be slowing substantially, and the stock may be fully valued. For The Street, I'm John Marino on Wall Street.